going over to that now. We'll just have Jim just going through the pound and anything else that's worth noting in the Forex markets for today, guys. So over to you now, Jim.
All right, thanks for that, Scott. So yes, look at what the pound has been doing. I'm just going to show you the chart here. First up, straight away, you can see that since yesterday, in a 2 4-hour candles, we've dropped about 160 pips. In 3 candles, it came close to almost 190 pips towards the downside. What actually happened during this period? Well, what could have caused this move towards the downside was that uncertainty about fuel prices, fuel supply in the UK. We're talking about, the potential need for possible rates increase or tweaking of rates before the QE, the balance between rates and QE, all that put together, the uncertainty leading up from that, primarily because of the fuel supply and the supply of goods towards the UK. What happened was we saw that big drop. It broke below that 136.78 level. It broke below that 135.88 level. Quite instantly, it rendered my view from yesterday on the euro pound invalid already. So what you should do right now is take away those lines, because you're not looking for it to bounce at 85.38 before turning back down. Now it's at 86.24 level. So what to anticipate at this point now for the pound dollar, with it being in focus? Coming back to the news here on forextradingasia.com. If you haven't already, make sure you go register for an account, log in, sign up. You get to redeem, you get to read, rate, interact, get points, redeem points while you are learning more about how to trade better. Today being Wednesday, we are looking at the UK news. We do have some news later at 2 o'clock today, but these are not big price movers. I've told you about the Eurozone data already. What I need you to focus on is at 22:30 hours or 10:30 and 11 o'clock, 11:45 GMT plus 8 Singapore time. We do have a lot of the central bankers speaking. This is an online session for policy panel. I think that because it is a policy panel discussion, we have members speaking, there will be a lot of talk about rates. There will be a lot of talk about rates. The current view is that they do need to increase rates. Look at the timing of when they're going to increase rates. They're going to give good indication there. And also pairing rates with QE, right? Tapering of their QE. They can't, what's going to happen is they can't just increase rates. They have to cut QE. They have to cut the spending before increasing rates, or while they're increasing rates in conjunction with it. So this is, every time they're going to talk about it, every time they give an indication, a timeline, an expectation, you're going to see the volatility increase during this period. But what I think is going to happen here is that we're going to see it spike up, spike down, test a few levels, but we're not going to form any clear direction from this news. What we're going to get better direction from is into next week, where we get the first week of October, where we see more data being released to support or to go against the view that the central bankers could be providing tonight. So take this with, as a preempt, and then after that, you're going to get more data next week to really see whether it's going to reverse in direction or whether it's going to continue in the stronger direction towards either the upside or the downside across the board. With that said, on Thursday, we also have the UK GDP number year on year looking to stay at that 22.2%, quarter on quarter at 4.8. I don't think we're going to see a big surprise here. Maybe a little bit of an upside, maybe a 4.9, maybe a 5, because we have seen some good GDP numbers from the US, and this usually translates across the pond towards the UK. But I wouldn't be too surprised if it stays at a 48. And if it does stay at a 48, what this could mean for the UK is that we might see it stabilize a little bit before continuing on to weaken back down, following on with the current trend. With that on Thursday, following on from that, we do have the US GDP numbers looking at a 6.6 quarter on quarter. And then on Friday, £1 manufacturing PMI number looking at a 56.3, again in an expansionary phase. And with that, we might again see that little bit of a spike up before a retrace back down. And that would be it. On Friday, we have manufacturing PMI for the US as well, with a very good number at about a 60.5, ISM manufacturing PMI at a 59.6. So again, possibly some strength for the dollar. So like Scott was just sharing with you, looking at the dollar index, we anticipate that we might see it retrace back down a little bit. So this dollar index, again, just as a reference, probably retrace back down a little bit, test that support level before possibly shooting back up towards that 94.53. So like I was going on a contrarian view yesterday, we did see that dollar index gain a little bit more strength, breaking above that resistance level, but I think we might see a retracement at this point. Bear in mind that I'm saying we might see a bit of a retracement at this point. I'll share with you a little bit of an extra after I've done the pound dollar. So with the pound dollar here, what could happen? You can see that over last night it's dropped that much. One thing you need to pay attention to is that it's way outside. Over the last few candles, it's way outside of Bollinger Band. So my expectation here is for it to retrace back a little bit. We are expecting some GDP numbers from the UK tomorrow. So I think that based on the current price levels, we might see it come back up and test that 135.88 level. For it to test that 135.88 level, I think that following on from that, we might see it track lower. We might see it track lower back down again. But at that point, I'm not sure if you go all the way to 133.65. You would be looking for again selling opportunities below 135.50. You could have a 40-50 pip stop loss for a good 160 pip take profit level, looking at a 1:4 or 1:3 risk reward ratio towards the downside. Why I'm a little bit hesitant for it to drop that much is because one, this level at 133.65 is from way back. I'll go back to the weekly time frame and you can see that the last time it tested and rejected this level was back in 2020 last year, end of August, and again also in 2019 in December. So this is a very strong or very far away support level, could still reach there, but I think that we're going to see a lot more volatility during this period before it tracks towards that support level. With that said, another reason why I'm not sure whether it'll come all the way down in a hurry is because if the pound dollar does track up and reject that level towards 133.65, what this could mean on the euro pound is we're going to see further significant upside. That means that we are looking for it to track down, sit there across before breaking that 86.51 level. If the pound dollar does keep dropping, the euro pound should keep tracking higher, and that would be a significant upside. You can see if it does break, the next level would be about an 87.97 level. So be a bit more careful with the pound dollar and the euro pound. We are reaching into the significant high levels. We are reaching into multi-year highs or multi-year lows. At those levels, we're going to see a lot more volatility, a lot more erratic volatility as well. It's not going to be a volatility before trend. We're going to see it bounce around a lot more. We're going to see it look like it's going to reverse before it continues on. So be careful with that. I did have Imran message me and ask about the US yen. So I'll just do that as a little bit of an extra, a tidbit for you guys. The question was if I thought that, wait, let me just bring it up. Where is it? Where's your question? Is it at a reversal point? What about US yen? Is it at a reversal point? So my view on the US yen H4 time frame here, to say that it's a reversal point is going to be quite misleading, because the way you should be looking at it is if you are relatively new to trading in, or if you're not even going to be watching it too closely, what you always want to do is look for the trend following scenarios. The reversal points are always very attractive, thinking that you can make a big return out of a reverse. But what you'll notice is that for the US yen in this example here, for a week, it's gone up about 200 and almost 240 pips. At this point, even if it does reverse, it would need to first come down to this 110.65 level and possibly break that before heading down lower. With that said, even if you do sell here, you would only have a 60 pip take profit at a maximum at this support level. Your stop loss might be a 30 or 40 pips. That's not a super good risk reward for a reversal. So what I would actually be looking is, even if it does drop towards that 110.65, I might sit out. I'll most likely sit out of that trade, but I'll be looking to see whether it hit that support level before looking for a buying opportunity, or for a smaller retrace before it bounces back up to break above 111.54 for that potential upside towards 115 even. All right, so a few things to consider, whether it's going to reverse all the way, whether it's going to reverse halfway, and whether it's going to resume back its trend. There are things to consider as well, such as the debt ceiling, such as the other considerations of GDP and the policies to be released by the central bankers. So with all that said, I will tell you more about that on the dollar, on the US yen and all the other yen pairs when we look at it tomorrow.